Since Meta stock price continues to drift up after the gap, the chart presents a good opportunity to use the Fibonacci channel with these settings. As for the horizontal levels, we can use the same range as the last time for the retracements and narrow down the extension levels to focus on these. Then shift the spiral and Fibonacci time zone towards the end of March to outline what entry into the mid to upper 500 range could look like. Alternatively, if something more can finally develop from these bearish candles, a possible triple top formation could improve chances of breaking below the channel. In contrast, Zoom is still quite bearish in the long, medium, and short term, with the recent fill of the February 27th gap up. Like last time, we can still use a Fibonacci fan, but adjust it. Then this placement for the trend-based Fibonacci time zone, adding a regular Fibonacci time zone here or here, can be optional since the intervals are quite close to what's covered with the trend-based Fibonacci time zone. Another option is also to add a Fibonacci spiral placed on the March 1st highs. In summary, if price is to continue its steady pace down, it could be realistic to see a break below 62, especially if daily volume is at or above 4.2 million. Then even if price were to sharply rebound, similar to the movement in late February, there wouldn't be any major long-term change until price can at least clear out of the 60s. Airbnb stock price just barely holding on to contact with the 0 to 1 range of the Fibonacci channel. And recently this gap down and push back when it was filled in provides a slight bearish advantage for price continuing this downswing. For more on these and other Fibonacci methods, along with instructional videos on chart patterns and indicators, please stay tuned and subscribe while also checking out the hundreds of videos already on the channel. Then here's what failure to clear 165 could look like, leading to even better conditions towards a bearish continuation. Though it would take some extraordinary selling to go below the channel and 155, considering the large bullish positions taken in this range around February. The drop into April has actually been with average to below average selling volume. So if price can hold on into the 160s for a bit longer and buyers can get volume back up to 6 million or higher, price can remain in the 0 to 1 range of the Fibonacci channel during this 0.382 to 0.618 interval, in which case 170 would still present moderate resistance.